The purpose of this video is just to outline a very simple strategy that you can use to trade from. It's based on exponential moving averages, EMAs, on the 30-minute time frame, and I'm just going to show you with this chart here how it works basically. So these charts, these are the ones that I post on the blog every day, and the ones that I refer to in the chat room and so on. But basically what we've got here is two main EMA lines, this purple line that you can see here and the blue dotted line. I also have a 200 EMA line here. The purple line is a 10 EMA, so that's 10 periods basically. So it will work out, if we go over here to where we currently are, this current candle, it's the average of the last 10 candles. The blue line is the 25 EMA and is the average of the last 25 candles. Equally, the 200 EMA, which is a lot smoother, you'll notice, as it's an average of 200 candles. And what we're looking for is basically the 10 EMA to cross the 25 EMA. Now, if I just go back a bit, what we're looking for is, as I said, these crosses. So you can see here at this point, ignore the times at the moment, I'm just going to show you the actual technique itself. So the purple line crosses the blue line, and basically that alerts us to a trade. So if the purple line crosses down through the blue line, it's basically saying a bearish alert, so we need to be looking to go short. If it crosses up through the blue line, as you can see here, that's alerting us to go long. And the actual cross is the alert, but then what we want to do is the next candle after the cross, we want to wait for the price to touch the 10 EMA line, and that is where we would enter. So for example, we've got the cross to the downside here. The price did indeed drop, but actually came back and tested the 10 EMA area. So if we'd have gone short after that cross there, if we'd have gone short at that level, which was 5686, the price did indeed drop down to 5675 in that case. So we actually made some points there. And then looking the next trade along, this is now in market hours, as you can see, 8:30 down the bottom. We've got a cross to the long side. Price did indeed rise. Now the price didn't actually fall back on these two candles to the 10 EMA area, but it did on this candle at 9:30. So we got a cross at about 8:30, but then we got our entry at about 9:30, and you can see there that the low of that candle coincides approximately with the 10 EMA area. So the low was 5689.3 and the moving average 10 was 88.7. So we're now moving to sort of some live trading, if you like, and we're going to look and use this EMA strategy just to actually trade live now. So what we've got, the 10 EMA is below the 25 EMA at the moment, and as you can see, it's started to turn up and it's looking like it might well cross the 25 EMA there. The price, as you can see, is slightly above at the moment, but is still hovering around that area. So once the cross is locked in, we would expect the price to fall back, test the 10 EMA area, probably about 5682, something like that, and then carry on up. Now you want to wait until the EMAs have actually crossed and that cross is confirmed. So for example, if you just look back in some of these other time periods, this is all out of hours, so it's not particularly clear. If I just go back to yesterday during the day, you can see there we've got the cross, it's locked in, the 10 EMA is starting to widen the gap between that and the 25 EMA, and then sure enough the price did an hour later fall back, test that level, and then the price carried on rising, and potentially there was about 40 odd pips to be got there if you managed to close right at the top of the spike. So in very simple terms, that's what we're looking at here, the 10 EMA crossing the 25 EMA, and then entering the trade on the retest of the 10 EMA level. Now I use this on the 30-minute time frame. It does work on some of the longer time frames. So for example, if I go to an hourly chart here, obviously there's not as many crosses, but they can be better and easier to trade when they do occur. Likewise, if we go to the 4-hour time frame, you can see here some quite clear trading alerts and signals. For example, we've got a cross to the downside here. The price on this candle at midday tested the 10 EMA and then fell back down again. Go to the next day, we've got a cross to the upside. This candle here at 12 o'clock tested the 10 EMA, and then sure enough the price carried on up. Again, just picking another one at random, we got a cross here to the upside yesterday. The price tested the 10 EMA and then carried on rising. So it does work quite well. It's quite reliable and probably works about 70-80% of the time. It's quite a nice simple one to use, and I do use that in conjunction with the standard support and resistance lines, which are the subject of the next video.